Welcome to Another Thing. I'm Larry Menti. What's going on with the stock market? After setting a record of 20,000, the Dow quickly set yet another record at yet another plateau of 21,000. So a couple of related questions. Is it too late to get in on the Trump rally? And are we being set up for a crash? Our guests will answer those and other questions in just a moment. But we begin our coverage, as always, with Ellen Kolodziej. Ellen.
Thank you, Larry. Well, ever since Donald Trump's election, the stock market has seen double-digit increases, and some people have dubbed that the Trump bump. But ever since his devastating defeat on the health care bill, some other analysts are now fearing a Trump slump.
Stocks hitting a record high after President Trump promises some big league tax cuts.
Let me simply make the long argument. I see Dow 25,000 within the first term of the Trump administration.
The talking heads shouted the news from every channel. The Dow Jones Industrial Average soared to heights never seen before, and our new president got a lot of the credit.
Yes, Donald Trump making the stock market great again.
President Trump's pro-business agenda, which focuses on cutting taxes and regulations, has helped foster optimism around the world. The Wall Street Journal says increased government spending on highways, bridges, and roads may well provide a lift to the broader economy, and tax cuts and looser regulations will be cheered by the financial markets.
The conversation goes a lot deeper than just the stock market and how much of it is Trump. It's really what the mood of the country is and where people are going to form their opinions about leadership in our country. So right now, it's shocking to many that the market would be up when so many are talking about a villain being in the White House.
Steve Cordasco is the CEO of the Cordasco Financial Network. He says, yes, the new president has helped create an atmosphere where the markets had reached new highs. But no president can predict how the financial world will react.
You can't control it. Donald Trump can't control it, as we're finding out. The Republicans and the Democrats can try hard. But at the end of the day, it's its own living, breathing thing.
And even though you hear predictions everywhere that the markets will now plummet because of the healthcare defeat, Cordasco's not convinced.
At some point, the market may see this, like I see it, as very positive.
Why?
He doesn't have to open a can of worms. It is what it is. Walk away from it. It's somebody else's. When it doesn't work, it's not his.
So despite all the uncertainty still swirling around the Trump agenda, most experts agree that he should get his tax cuts through Congress, and that could keep the stock market booming. Reporting for Another Thing, I'm Ellen Kolodziej.
All right, thank you, Ellen. To talk more about the rally and what's causing it and is it sustainable, Kurt Rossi is a wealth advisor and certified financial planner, and Dr. Susan Hume is Associate Professor of Finance and International Business at the College of New Jersey. Thank you so much for being here. What is causing this rally? Donald Trump has taken credit for it. Is it Donald Trump?
Donald Trump is a big part of the rally. So we've seen some people have referred to it as a Trump rally. Others have referred to it as a hope rally. But the market, since the election, the Dow is up nearly 15%. And much of that has been driven by expectations for infrastructure spending, lower corporate tax rates, deregulation. So that is what has helped to propel the market to where we are today. In fact, in February, the market increased in value 12 consecutive days. And you have to go back to 1987 to see a streak longer than that.
And it took a big jump again after his speech to Congress. So it sounds like it is at least Donald Trump's promises that are pushing this rally.
I think promises, but a shift in administration and a way to make the United States more competitive globally. So teaching international business, you look at other countries, you look at the competitiveness in terms of exchange rates, and our dollar has been very strong and robust. That makes us less competitive in markets. If you look at other countries like Japan and Germany, they've been very robust in manufacturing because their exchange rates have been so much lower. It makes them more competitive.
And that all plays into the stock market rally because that's some of the stuff Donald Trump's talk about. Now let's talk about sustainability. So you have this rally, and much of it is based on some of the things he said he's going to do, some of the things he might have a difficult time doing, especially the infrastructure bill and possibly the wall, which would also play the construction. When the first negative thing happens, does this collapse?
That's a great point. So the loftier or the frothier that the market gets, the more that the potential for disappointment, right? It increases the chance of disappointment. So if we see, let's say, an infrastructure bill that's not as meaningful as the market is hoping for, if lower corporate tax rates aren't implemented, the market, that disappointment could cause a correction in the market, and it leaves it a little bit susceptible to that.
Correction's better than the other C word, crash.
Yes, that's correct.
Correction wouldn't be bad.
Well, I don't think the market is overvalued. Maybe the PEs, the measure by which many investors look at the market, is a little higher than normal, but it's within range. It's not at the 2000 level where you had valuations over 100, but having a little higher valuation in a low interest rate environment is not unusual.
So you see some fluctuation, but not a huge downturn.
We've been helped so much by a real infrastructure change in the commodities, especially oil, with the Permian Basin and other production with the U.S. And now we're moving into a position where we're actually exporting oil. So it's that ability to compete and to supply energy into the marketplace that makes us as a country much more stable in that regard.
Now let's talk about personal portfolios. Is it too late to get in?
Well, I think with the market at its current price, it does cause an investor to kind of pause a little bit and to reassess their long-term goals. If you have a long-term time horizon, there's nothing to panic about here. But you need to make sure that your portfolio is in alignment with your life. And what I mean by that is if you have a short-term goal, if you're looking at your cash reserves, those shouldn't be invested like they're for your retirement, right? But alternatively, you don't want to have your retirement portfolio invested like it is a cash reserve.
But the fear is jumping in when it's at its high. So people seem to get wrapped up with, oh, it's hit a record, I got to get in. Might be the worst time to get in.
Right. Well, I think to Kurt's point, if you're there for the long run, you don't try to time it. You try to basically average in. And so I think you might see some correction, but to try to guess when the market was, if you tried to guess back before the election, you would have missed investment opportunities. So waiting is not always the best opportunity.
You brought up a fascinating point, because before the election, people were estimating that the stock market was going to crash after Donald Trump got in. They thought it was going to do exactly the opposite. What do you think was the reason for the pessimism, and now what happened? What was the result?
Well, I think it depends on who you speak to. So, investors who really bought into the changes in policy, the market, I think leading up to the election wasn't quite sure what it thought about the upcoming election, but once it set in that there's a higher probability of these policy changes, optimism started to enter into the picture, and so you started to see some rallies right away in financials and industrial stocks, materials. So those benefactors have really increased in value since that point, and moving forward, there is both optimism, but at the same time, there's some reason for caution too.
This isn't the time to be a passive investor, right?
If you haven't rebalanced your portfolio, like many investors do not, to your point, with the rally in the market, you're probably out of balance, right? So the more aggressive investments have increased in value, which means your more conservative investments make up a smaller percentage. So it is important to take a step back and reassess.
And Dr. Hume, I'll give you the last word. What should people be doing right now with their 401k or with their investments?
Well, to his point, look at them and to see where your concentration is. And you probably had some very large gains in certain areas, so you probably want to reevaluate what your distribution is, what type of assets you have.
The rebalancing is a key word, isn't it? You don't have to buy in, but just balance what you have.
Be proactive.
And be prepared if there's some correction to take advantage of that. So having, with the rebalancing, some availability if the market correction comes about.
I like how she said take advantage of the correction. That means you're that optimistic that if there's a correction, that's the time to jump in because it's going to just get better.
I do believe so, yeah.
And you believe that too?
I'm a little bit more cautious, but I do think there's some optimism, but you do have to be careful.
Wonderful, thank you. You've been great. I really appreciate it. Kurt Rossi, Wealth Advisor, Certified Financial Planner, and Dr. Susan Hume, Associate Professor of Finance and International Business at the College of New Jersey. When we come back, the Donald Trump effect and bank regulations, are they being eased? We'll find out when Another Thing continues.